Let's start with the gold prices, which are trading near 2.5-week highs and is on track for its best week in almost a month. On weaker equities and growing hopes that the US will not raise interest rates in 2015 early. Take a look at the Brent prices as well, and you have seen some pressure coming in for that. It's holding around that 107 a mark, following a weaker outlook for 2014 global demand growth from the International Energy Agency and expectations that more Libyan crude will reach the markets by next week. To discuss more about all of these commodities, let's get on board then Vijay Bhamwani, who's author and CEO at BSPL India. Also joining us is Jörg Keener, who's MD and Chief Investment Officer at Swiss Asia Capital. Vijay, hi to you first. And what's your sense really on the last day of the week? Next one is going to be really truncated. So are you looking at some similar or particular pattern in case of commodity trades?
Well, Manisha, what we are seeing is a pullback rally in metals, both industrial as well as precious, and that has to do with the interest rate announcement by the US Fed. There is a likelihood, like we mentioned yesterday, of the bullion prices seeing an overshoot of the 28,750 levels that I talked about earlier, and 43,750 on silver. So we are trading comfortably above these thresholds, and I would not really rule out 29,200 on gold, and silver, of course, at up to 44,000. We'll review these levels once we reach there. But what is interesting now is in the industrial metals complex, you are seeing non-ferrous metals like aluminium and nickel leading the pack from the front, where copper is still trailing. So I would want copper to trade consistently above the 414 or 415 mark to rope the bulls back into the fray, failing which there will be some profit taking on aluminium and nickel at higher levels.
Yeah, let's get you in the conversation as well. And what is your sense now on the prices, especially gold, which has seen a strong year 2014 till time, on concerns from Russia, China buying? What's your sense on the prices now going forward?
I think, we've been since April last year in a consolidation phase. We established the bottom in summer, and now we are somewhere between, 1150 and 1400 in the trading range. The demand cycle of the offtake physically in Asia is very, very strong. With the liberalization of the gold offtake in India, it's actually accelerating tremendously, and you see these two countries taking just the world production of the market. And we see this trend not really easing off, mainly due to the fact of the weakness of the US dollar because of the inflationary concerns in Asia, where people are looking to protect their purchasing power in the longer term.
Vijay, how would you look at the energy space now? Because this is one area which has been very, very volatile in last couple of sessions now. We had seen prices run up all the way from that 98 odd levels to 103. And the kind of, pressure that it's seeing today, of course, because of various fundamentals, where do you see the Indian prices?
Manisha, I'm not very bullish on energy, and where crude is concerned, I think in the 6300 or 6320 odd levels will see selling pressure emanate at higher levels. So 1.5% higher from here, and I would start seeking short selling opportunities. On the other hand, natural gas, which I expected to run into some amount of profit taking at 280, seems to be making an attempt to go towards the 285 odd levels. So natural gas, one can postpone selling short from these levels. I would have expected to go short at 280, but I'm deferring my decision for another 2% bump up from here before I start pressing shots. Where crude is concerned, I think the market is fairly well supplied, and the supply constraints which are feared by the market seem to be a little overdone as far as I'm concerned. So I would expect a price decline from the 6300 odd levels. So here again, I would basically advocate shorting at higher levels.
All right, so let's check on a weekly basis. While we have seen the international prices go up, the Indian prices really have declined. Jörg, what's your sense? The crude prices have seen mixed signals on supplies and demand, and of course the geopolitics as well. Where is your sense on the NYMEX prices closing this quarter on?
I think you've seen oil trying to break on the upside. I'm not quite sure we're going to do that in the very, very short term. But if you look at the fundamental structure and you look at what we had record US production and despite that, it's relatively strong oil prices. And the main reason is that a lot of international exporters of oil have seen actually exports falling due to aging fields. We see that to continue, but if you look at the US picture of oil production, you need at least an $80 per barrel price in order to break even. You've seen the spread between US prices and European prices narrowing, which basically tells you you're in a longer term positive market, in a bull market, whatever happens on the Russian side.
Jörg, also the Brent crude prices have been factoring in all the news from Russia and Libya, etc. How do you see the concerns now playing up in prices?
I think what we have today, and we've been now for a few years in that environment where we see macroeconomic, geopolitical warfare through currencies, warfare through trade. And if you look at it from that point of view, then you start seeing that trade becomes much more anti-global, more barter trade driven, and that means in general higher prices. So over the medium term you will have to look at higher price segments and maybe different price segments depending on who you trade with.
Fair point that, Jörg, but let's take a look at the base metal prices then. And Vijay, first to you on that. What is your sense? Because we saw the nickel prices running up, there was a catch-up with aluminum, and we saw some bit of a gain coming in for copper then. It's lead really the latest one which seems to be doing the running up.
Absolutely, Manisha, and like you rightly pointed out, copper seems to be trailing. And surprisingly, what you are seeing is aluminium having run up to the 112 plus levels, which is a short-term resistance. And the fact that aluminium is trading comfortably above that leads you to believe that there is some more short covering in the offing. Where nickel particularly is concerned, I think the 1058 level seems to be an intraday resistance for now. But on the upsides, I would expect nickel to go up all the way to 1,070, 1,080 kind of levels if this buying momentum sustains. So one needs to postpone any kind of a short decision here. And as far as the overall industrial metals pack is concerned, the fact that copper is not really participating as much as the others would put somewhat of a dampener on otherwise outlook that seems to be improving over the last 2 or 3 trading sessions. I remember saying I'm negative on industrial metals. That view seems to be turning around a bit, and what is actually inhibiting across the board buy decision is the fact that copper is still trailing. Once copper starts to catch up, I think I would feel a lot more comfortable.
Jörg, what's your sense on the base metal prices which have been catching up one after the other on stockpile reports and of course the various economic data as well? Which one are you picking up from this sector?
I think if you look at the bulks, they are still in bear market territory because we still have lots of overhang supply if you look at iron ore and coal. If you look at the base metals, you look at copper, you see Chinalco having real struggle with to maintain the 10% output which they have contribution to the world supply. We don't see many new projects, so I think copper looks reasonably well. If you look at nickel, tin, zinc and lead, your structure look very, very bullish indeed. On the aluminium side, unfortunately, the structure is not just supply from aluminium, it's a smelter issue. We see smelters getting shut down, and as we shut down the smelters, I think we're going to see in the medium term higher prices too.